All right, my man, Snehal Fulzele. I believe I have the correct pronunciation. I'm excited to chat with you. Awesome company, great background. I'd love to hear your personal story, maybe specifically starting with the inspiration for your current company. What were you doing at the time when you started the business, and what was the initial inspiration into the business?
Thanks, Mike, for having me on the show. And I think I have to probably go back a few years before I start talking about, what made me start Scion. Well, just to give you a quick background, I grew up in India, in the central part of India, and then it was a bit of a poverty-ridden place. So while growing up in my formative years, I kind of knew, having access to financial services is pretty much like a basic human right. If you don't have it, you don't get a degree, you don't get a mortgage. So pretty much all options that you have as an individual just to grow in this world just gone away. That understanding at that time was really around, okay, maybe just that region is poor and maybe that's what it is. But then throughout my, younger years, I traveled to Mumbai, one of the major cities in India. I got my undergraduate degree in computer science. Then eventually I came to the US, went to Carnegie Mellon in Pittsburgh. And I think during those travels, it was quite mind-boggling to me, the disparity that I saw. And what I saw in my formative years while growing up, regardless of where you are in the world, it's the same. Meaning, probably 40% of world's population today probably don't have access to formal banking services for a variety of reasons, right? And when you think about that way, it's just incredible. It's heartening. I think we have kept bar very low, in my opinion, and I think we haven't done a good job of just bringing more and more people in the gamut of financial inclusion. So that sort of stayed with me during my formative years, during my travel. And there are a bunch of other experiences that sort of I can just talk about a little bit, which even exacerbated, what I was experiencing. I think after I graduated, I went to get a credit card with PNC Bank in Pittsburgh. I actually had an offer from Oracle. That was my first job out of school. And it was a decent salary job, and I had an offer. I was going to go there. I went to PNC Bank to get a credit card for $1,000, and they declined. And it was sort of it was a unique experience. I thought, if I were them, I would bet on me. I would give me $1,000 of credit card. So I thought must be something wrong with PNC Bank. I walked into JPM, they declined. I walked into Bank of America, and they said the same thing. And I go, this is interesting. Then figured out that the traditional model of underwriting people, which is FICO based, and I was a thin credit file. I came from India. I did not really have credit history, and I was pretty much designed to keep me out of the loop of the formal financial services. But I felt very strongly about it, and then I took up a job with Oracle. I stayed there for 3 years, learned the art of building enterprise software. But I made doing my bit in bringing more people in the sort of the sphere of financial inclusion, sort of a personal mission. Started a company in 2013 called Cloud Lending, and pretty much it was an enterprise software company focused on using alternative forms of data to underwrite borrowers. So we worked with small business lenders, we worked with progressive consumer lenders, and we started using, or at least giving them tools to look beyond FICO. So we were, I remember one of the earlier customers was a small business lender. They started using Yelp review data to underwrite borrowers, which was kind of good as opposed to just using FICO of the owner, right? So through that journey, eventually we exited business. We sold that business to a company based out of Austin called QTWO. And during all of this time, I felt like I was actually closely watching microfinance as well. Microfinance institution, if you remember, it came out and said that, hey, This is going to really remove sort of world hunger and poverty from the world. I think it was an interesting experience, but it did not deliver on its promises. That's just my personal opinion. And over the last 3 or 4 years, when you think about blockchain as a technology and its capabilities to build transparent financial systems, and more importantly, its capabilities to actually bring the underserved and unserved market globally, not just US, but globally, and provide them access to formal banking services, lending, savings account, checkings account, all in the blockchain. I think this is probably the closest answer I have gotten to saying a technology-enabled bit of a revolution, if you will, that will sort of solve this problem. So when you mash my personal ambitions of the personal values around financial inclusion with something of a technology as cool as blockchain, which has the promise of changing things around, I was just super excited about that. And we started Scion primarily to simplify the world of crypto and blockchain, because the technology is amazing, but understanding that technology is it's kind of not easy for non-crypto savvy people. So we are on the mission to actually simplify that layer, but through that we want to accelerate our mission of making financial services more inclusive and competitive. So that's like a long answer to your question as to where we landed, how we landed, and we can talk more about Scion, but that's a little bit of background.
Yeah, thank you. I'd love to learn a little bit more about your experience in India and maybe more broadly about India today. When you moved to the US to go to Carnegie Mellon, I think that was around 2007. So 15 years ago. I'm sure the world was different both in the US and in India, and crypto certainly wasn't a thing. Was the process of moving here simple and easy? Does it require, either back then or today, a certain amount of just financial capability, just money you'd have to pay, or is there just a student visa you get from applying to Carnegie Mellon and getting in? Have you noticed that change over the years?
Yeah, I mean, we haven't talked a lot about that recently, but now that you're talking, bringing that up, it isn't. At that time, it wasn't easy. We didn't really have the financial means to go to an expensive school like Carnegie Mellon. I always put myself through public educational system in India. I should proudly say, I've never paid anything until Carnegie Mellon, including my undergraduate degrees. That basically had scholarships paying for it. At CMU, however, I was actually behind my tuition payments, believe it or not. So I defaulted my first semester, and CMU was kind enough to give me a grace period of another 45 days to go, get the tuition. I think it was like 20,000 USD or something, a lot of money for me. And my elder brother, who was in India, was trying to get me an education loan he's just going from bank A to bank B to bank C, getting me a loan. And it's funny because they obviously don't recognize, let's say, the quote unquote, the potential of candidate they're betting money on. However, those banks would ask for, hey, if you have a real estate that's worth 40,000 USD, of course, we're going to give you 20,000 worth of loan. And when you think about that, at that time, I was like, banks are basically designed to give money who don't need it. So I will never get a loan from a bank because I don't have the collateral. If I had the collateral, I wouldn't be coming to you and asking for money. I would probably be better off not taking that loan. And the loan was like 18% interest rate. That was like the student loan we're talking about. So had to go through that. I defaulted on my tuition. Then I managed to get some friends to, pool some money in. I cut a deal with CMU saying, hey, I'm going to pay you half. And I think I started negotiating with an institution on my tuition, which was like a big life lesson for me, that you could actually negotiate your not way out, but at least you could. That was my first negotiation, sort of a learning experience where I basically talking to CMU saying, hey, I can only pay half of the tuition, but give me another 45 days. I'm going to get the rest of it. Eventually, I got, some scholarships and some personal loans from friends and family. I managed to pay it off after I got the job. But
yeah.
Anyway, that was like and I don't think, to your question, has it changed much? I don't think it has changed. I think it's, I don't think the state of this process of funding your international education has changed much.
Right.
I think for folks who grew up in let's say tier 1 cities in India, I think that probably is more affordable there because they probably have more options. But for majority of population in India outside of those tier 1, tier 2 cities, it's, I think, kind of very hard.
And was it a obviously desirable path to take to come to the U.S. at that time for higher education? Like, was that sort of what people wanted to do in India? And is that, to some degree, that must be changing? Obviously, with COVID, people are not traveling as much for school. Yeah. But at that time, was it viewed as sort of this is the place to go, or were there many different options, even internally in India as well?
Yeah, I think that landscape has changed dramatically as to what options Indians have or Indian students have today versus what we had at that time. But I personally was very motivated to actually become an entrepreneur from a very young days, candidly. And so I wanted to learn the art of running business. And now I'm inspired by Tata's. And so that's like one of the big institutions in India. Tata is probably 100 billion plus revenue type of an organization, probably the biggest in India. So I wanted to learn the art of how to start a business, run a business. And I thought the best place to do that would be to go and get a business degree. So I go through this competitive exams, and you may have heard about India's competitive exams. They are super competitive.
What is it like? What do you do? What makes it super competitive? What's the experience like in the inside?
So I think for the top 5 business schools in India, they are called as IIMs, Indian Institute of Management. You have to be in the 99.5 percentile. You have to perform at that percentile to actually even get an interview call from them. So the conversion that you're talking about, you have about 500,000 graduates sitting and competing for about, call it 300 seats. So yeah, it's pretty competitive. But I was actually quite inspired and motivated to go to one of these schools and get a business degree and my whole goal was I want to really learn art of running a business or starting a business. So I get lucky. I land in this college or the business school called Indian Institute of Management, Calcutta, IMC, which is like the 3rd best institution in India. And I spent the first month, which I kind of understand very, like, this is 2006 we're talking about. And I think they weren't teaching how to like start a business, or I think on day one, I remember people talking about after 2 years, how they will get jobs with McKinsey and Barclays and JPM on their trading desk and how they will make a lot of money. And I was like, I didn't sign up for this. I actually came here to actually learn how to build a business or start a business and network perhaps. And I think people were really inclined towards getting these fat paychecks, even from day one. And that was like a moment for me. And I think where I come from and where I grew up, I just didn't really have the baggage to say that, yeah, it's okay because I left after 2 months, I dropped out. And which was like a very bizarre thing to do in that institution, because that doesn't really happen in India, where you go to an IIM. It's like going to MIT and after 2 months saying that you just call your dad and say that, hey, I'm not continuing, I'm going to go. And maybe that happens more often here in the US, but it wasn't the case in India. So anyway, long story short, I quit after 2 months of just doing accounting classes and such, which was all good. But I didn't feel like I need to spend 2 years of my life when I knew that I'm not going to learn the art of, building a business. So what I did was kind of, I think I find it interesting because it really helped me. I flew back to Bangalore, city of Bangalore, and I joined a nonprofit. I joined a nonprofit as a teacher, and I taught. There are a bunch of folks who are coming from tier 2, tier 3 cities in this nonprofit, and the nonprofit is all about personal development so that they could get jobs, even though they had the technical skills, but they weren't quite, presentable, or they couldn't really crack the interview. So that was the very unique nonprofit. But I taught there for 8 months. They gave me food and shelter and some money. And then I had to learn how to run a business, and I could have started something, but I thought US would be an amazing place because most businesses get built here. So I have to go to US somehow. Then I think I landed in Carnegie Mellon, and I think the primary objective was to come to the States, build network, and eventually find a way to build business, run company. That was like the goal.
Yeah.
Because I felt that was very empowering. But yeah, CMU was the conduit, and it was amazing. I actually made a lot of good friends. My flatmate, my buddy, his name is Darpan Saini. He and I started the first company, Cloud Lending, which we eventually sold for $100+ million. So, which was a decent outcome. But long story short, I think US is an amazing place for folks to be entrepreneurial. And coming back to India, I think India's ecosystem has changed dramatically over the last 15 years. I think the same institutions I'm talking about, I think they are now very pro entrepreneurs. I think there are lots of amazing businesses been built in those institutions too. So, but at that time, years ago, it wasn't the case.
Yeah, it seems like today is a different world in India in particular for entrepreneurs. The number of companies that are being funded in India seems to be skyrocketing. I mean, the population just is so high potential, both in terms of the basic, I would call it like intellectual capacity or intellectual potential of people is there. And then the sheer numbers. I mean, if you look at a graph, there's a great graph I can include in the show notes, but it shows the three-dimensional representation of the population across the geography and throughout the world. And it'll show the US, and you see these, little spikes for different cities. And then, New York is a pretty big spike, Miami, Seattle. And then you go to Europe and there's spikes all across. And then India is just, it's like a mountain of people. It's hard for people that have never been to India, myself included, to really get a grip of how dense and how vast the population is there. Same in cities throughout China. So I think those two economies in particular just seem, once the stars align, or more specifically, once the infrastructural layers are foundationally stable. There's a secure justice system, executive branch, governmental branches are in power, and the institutions are reliable. Like, the population just seems like it's going to be able to explode economically. Have you been in close touch with people in India today? Are you up on what's happening over there?
Yeah, no, I am. And I actually actively invest in a bunch of companies just primarily focusing on India. India is when you think about, to your point, if you just put a circle over India and China, that's probably 1/3 of the entire world's population, right? So it's extremely dense. Many times what happens, especially sitting outside, you look at a country like India and you think, oh, that's a huge market, right? With 1.3 billion people or whatever. But I think doing business in India, and if you are the Silicon Valley type entrepreneur who thinks about TAM and scalability and things like that, actually, there are limited number of businesses that you can start because the population with disposable income is still pretty small. And when you start thinking like one measure is how many people in India hold a credit card. Let's just say that. In the US, I don't know, I'm just getting a guess, maybe 60% of the population may have a credit card. In India, out of 1.3 billion people, I think about 70 million people only have a credit card, right? why that is important is because I think that that's the kind of the population that you may want to target if you are trying to build like a high flying startup.
Right.
So today, it's basically 100 million population type of a market opportunity for you if you're building a direct to consumer business, right? I think by 2030, however, if you look at the per capita income and the growth, and I think by 2030, that number should go up to 400 million people. So so the 400 million people, I think India will likely be third largest economy by 2030. That's when things will start to become really, really interesting. So I personally focus on, Scion's focus, I think India is one of the markets that we will eventually go after. Maybe not today, but if you have that type of a time horizon, like 10 years, you will see that the actual opportunity pretty much quadruple from where it is today. And I think that billion people number makes more sense when you have that lens around how many people can actually spend on your stuff.
It's a really good point, because you can't sell software if you don't have a credit card. It's very difficult to collect payments if people don't have money to pay. And the deception of 1.3 billion is it's alluring. And I think typically I find that the resistance to friends of mine who are scaling companies internationally is they're thinking, okay, time zone, it's on another part of the world. It's another language. It's difficult to integrate into the payment system, and then disposable income may not be there. So, and also the culture is different. The way that there was one example I saw recently with how food is delivered. So it was these runs that guys would make. So there's a company that was providing a delivery service for food, but they wouldn't deliver food. They would pick up the food from the house. Yeah. So like guys would go to work, then the food delivery guy would come to the house where
yes.
the wife would make food and then deliver it to work. And the wife would often make food for multiple people. And then so she would be able to earn income in that way and then deliver it to people at work, which is just, I think about that here logistically, and I don't think that there would be enough of people who would do that. It's not part of the culture. Yeah. I think there's probably many of those examples just from how people are driving, the traffic, the types of cars, the banking, the infrastructure, the food, the sleep patterns, behavioral patterns, how many people are living in a household, how close they are to each other. It's quite a bit different on many levels. A country that I'm really excited to go to today. What would you say on India for a minute? What would you say is the thing that either holds them back from economic development at a rapid scale, or it may be the same answer, is the thing that will catalyze them forward? Banking system, judicial system. Is there something that's kind of an obvious problem?
Yeah, I think it's both opportunities as well as challenges. I think the policies have to do a fair amount more to just make that country a much easier place to do business. Even getting a bank account, it's painful.
Yeah.
It takes time. We are actually trying to set up a subsidiary in India because we have a bunch of developers there. And that whole process will take, meaning setting up an entity, getting a bank account, and all of that will likely take 3 weeks, which is kind of obnoxious, candidly, and it's painful. Why should this process take 3 weeks? And this is after the current government's efforts of making it easier for businesses to do. So previously it must be, 6 weeks, who knows? So I think policies have to be a bit more entrepreneur friendly, I think business friendly. And then secondly, the country has a pretty young infrastructure. So the roads are being built. And I think China has done a phenomenal job. I think one of the reasons why China has been so successful is the infrastructure they've managed to put together in a short span of time. So the supply chain became easier. Transparency became like a thing. In India, a lot of things are just opaque, and the infrastructure, both, not just I'm talking about physical roads and such, but telecom infrastructure. It's like you want to call, it just keeps dropping. Mm-hmm. So I think they have on the policy and the infrastructure end, government has to come to the table and solve those problems. People are extremely I think there are lots and lots of entrepreneurs now who are trying to solve problems. Great motivation. Entrepreneur spirit is high, like it's at a peak right now. There's a lot of money flowing in. The market opportunity is there. So I think if both of them sort of come together, and it's easier said than done. There's no reason why that country can't be very, very successful. I think the ingredients are there. It's a matter of time, but few stars need to align.
Yeah.
It just won't happen automatically.
Yeah.
And China is a great, great case study. Man, that country is, I mean, they were what they were and what they are. It's incredible.
Well, they're very successful from an infrastructural development and economic viewpoint. I think there's a trade-off there for that they make. You know, obviously with the Communist Party having just a absolute dominating control and power over the market. So I think that price hasn't been quite cashed in yet. You know, citizens, you know, like it's a different world there. I mean, I think more so than nearly anywhere else in the world, with the exception of a few countries, the power that the government has in terms of taking people out who disagree with them, you know, making unilateral decisions on the direction of the economy. It's wild. It's a very, I think when you centralize power like that, you have the ability to move incredibly quickly, make decisions, and then build a hospital in 5 days. But if you make the wrong decisions, you also can quickly go down a bad road, which, you know, it's good that we have a diversity of strategies throughout the world. Like different countries take different approaches, which is, I think, a really healthy thing, probably a naturally evolving thing. But it is interesting to see the comparison.
At the same time, and India is a democracy, and I think to your point, making decisions, it just takes time. And that's why it has taken time. And I think if the country, India, believes that they will be third largest economy in 2030, I mean, they'll probably take another 5 years to get there because it just takes time to make those decisions.
Yeah,
so
in hindsight, 5 years not that bad. Crypto, though, they don't seem to be making great. I don't know. What are your thoughts on the direction of crypto in India? Being 1.6 billion people, crypto, and only 70 million have a bank account or a credit card. It seems like crypto would be a phenomenally beneficial technology for the billion plus people there. Yet the government seems to be discouraging it from a policy standpoint.
Actually, there was a news a couple of days ago. There was a budget session. The finance minister talked about that in India, and they made crypto pretty much legal. Like they said that, hey, we're going to tax it, 30% tax on your capital gains, which is basically it's legalized, and then even payments are acceptable. So since that news, and this just happened a couple of days ago, you may not have watched it or something, but I had a lot of friends there. They talk about it. I think you will see some insane, like exponential growth in it. It already was happening. The crypto adoption was there, but now it will be at a different level. I was speaking with a friend of mine whom I grew up with. He never left this tiny little place like ever. He's been there for last 38 years, right? And I was chatting with him this weekend, and he's talking to me about Cosmos, and he's talking to me about Phantom and whether he should buy that coin. It's for me even it's unfathomable that this guy is talking to me about digital currencies and ability to buy, Phantom, and can I stake it? And it is, I mean, you can see it in my face. Now I can't believe it. So I think it's happening to that level where it has actually percolated in really, really rural corners of India. And I think if CBDC becomes real, and this is an interesting topic and it's very close to me, if India launches, let's say, call it the CBDC, the central bank digital currency, and if they don't use the the existing banks as the distribution mechanism, and then they allow anybody to directly open up, let's say, a checking account with central bank, RBI, the Reserve Bank of India. I mean, I don't think that will happen. That's just maybe I'm dreaming. But if that happens, what that would mean for normal people who are being not part of the formal financial services is they'll start building their credit history. They'll start having like an account with a government entity. Eventually, they may even get access to loans and all the things that they've been not given through I refer to banking system as distribution for government. And it's the same in the US also. When US comes with the Fed coin, most likely they will distribute through banking system. Same thing that did with triple P loans during the COVID time. They could have said that, hey, we will write you a check, apply on our website, and Fed will wire you money on your... But no, they wanted to go through the existing distribution. And there's a reason why they want to do that, because that's how they get transparency. That's how they generate revenue. It's the establishment, right? So that's a bit of maybe a wishful thinking that if retail CBDC becomes like a real thing in India where end user can open up accounts directly with central bank, that would be a start of, something very, very interesting.
Yeah. Wow. The implications of people in rural areas and just by rural areas, really everyone in the world. Once you have access to the internet, then you can dive into crypto. You can become an economic player, participator in the world economy, just as anyone could in a major city. When people are remote, companies are remote, it really doesn't matter where you are. That'll take a while. It'll take a while for people to realize that is a career pathway to take and then to really invest in it. But already the bottlenecking around software developers around the world, I think the word's getting out very, very quickly. When people are making $50 an hour and they're talking to their friends who, they grew up with and they're working at a restaurant making, 1/5 of that in whatever town they're in, it's just, it's hard not to see how we all jump on this bandwagon, so to speak. Do you see any obvious implications or maybe non-obvious implications of people, not even throughout India, but throughout the rest of the world coming online and coming into crypto in regards to, I would say, throwing out a few, certainly the project development of many different protocols will skyrocket as people learn to code, and then people who know how to code start contributing more so in areas either part-time or full-time. There's probably going to be a large transfer of wealth that will continue to happen from institutional, probably Western countries like US, Europe, people who are managing large funds. And then the technology it explodes in crypto, and all of a sudden your friend who purchased Cosmo or Phantom, he was early in on a project that somebody finds out years later about. So then he becomes wealthy. Are there other things that you think about when you think of this? Is there maybe a potential dark side? Because a lot of this seems very light. It's like, well, all these people are going to, get great jobs and they're going to be happy and they're going to work in a world economy and we're all going to be rich. Like, is there another perspective that you'd say people should be aware of on how what does that make sense on what potentially could reflect on in a dark way?
Yeah, and I'm actually, just generally speaking, I'm a paranoid entrepreneur. So I just think about all the things that will go wrong, and I just focus my energy there. When I think about the world of crypto and the adoption and all of that, I think right now we have over 100 million people having some sort of a crypto wallet or crypto account or crypto something. I think there's going to be an exponential rise in Ponzi schemes and fraudulent ways to basically loot people. I mean, this just happens. The financial literacy aspect of this planet Earth. It's really low. I mean, even among the educated, the fact that we don't have a subject during our curriculum called money, when we know that the entire world runs on it. We should be talking about money when you are like 4 years old, in my opinion, right? And I think we don't have that course until you feel like I need to learn that and maybe I'll get a degree in finance, right? So the financial literacy, even among the learned ones and among the people who don't have formal education, they are so trend focused. This guy would be a really good example. I'm sure he's talking about Phantom and Cosmo, but he doesn't have any basis. Like, he doesn't know the fundamentals. He's buying because I'm sure his friends, his family are also in it. Similarly, they will also buy lots of money, and by the way, they'll probably borrow money to do this. They'll probably mortgage their house to do this because they see that if they have like a one good year, like even 6 good months of returns, you just as a human being, you just don't see the dark side. You're not paranoid because all you see is, oh, I made like 2x of my money. Oh, then you start thinking about, if I had so much more, I would have made so much more. I think there's going to be just an incredible rise in Ponzi schemes and fraud schemes. Now, here's a point. I think SEC getting involved in countries, obviously in the US, I'm sure in all the other developed nations, you have these agencies who are protecting investor rights. And I think that's an amazing news. I think emerging economies are going to struggle because they may try to regulate, they may try to do this and that, but people are going to, they don't comply as easily because that's their way of living, right? Yeah, I mean, there is a rule, but you have to wear a mask. We were going to a restaurant. I mean, in emerging economy, in Nigeria, you think everybody's following that? No. So I think there's going to be just a rampant fraudulent Ponzi schemes out there, and people, a lot of them are going to lose a lot of money, and it almost always hurt the lowest on the strata.
Yeah, it's a good point, I think, to highlight the investment strategies that are pervasive across all investment opportunities, whether it's stocks, equities domestically in the US or crypto, or it doesn't matter. There's these fundamental human psychological attributes that play into it, where you have a hype cycle where things get really exciting. We're in one right now with NFTs. Everyone loves NFTs. Every company's launching an NFT. If you don't love NFTs, you're, an old guy, or you're in an older generation, and it's like, get on board or else you're lame. And that kind of camaraderie that is like, oh, this is great. Yeah, it's great, right? Yeah, it's great. Everyone's looking at each other. Yeah. NFTs are great. Digital art, JPEGs, all that. Let's buy them. And then it kind of stalls out. It's like you run out of gas on that. And then the whole thing kind of implodes and it sinks down. It becomes a little depressed. And then we recalibrate and say, well, okay, and then conversation starts shifting to what are the fundamental economics? What's the actual value produced here? And then people become critical thinkers. In that cycle, it seems so predictable in some ways, having gone through it a number of times now, and for me personally in crypto, where when you see things quickly grow without any actual news, just people are talking about it, they're talking about it. I look at that and think it's going to regress in some way. If things rise too quickly, it seems like that's the pattern more often than not. And likewise, when things fall very quickly, it seems like that is often a emotional and not a practical, real world price adjustment mechanism going on. So that pattern is kind of, in some ways, you kind of have to go through it. You have to get burned a few times. And even when you do, I'm sure you've experienced that, to then in hindsight be able to make the good decision as to like, okay, should I sell now? It's I don't know. It might just be impossible. It might just be like predicting the future. But yeah, your point is right. I would love to shift a little bit to both what you're doing now and your last business. Your last business, you ran for about, I think, 6 years, and you sold it for a couple $100 million. So awesome return on your time. What did that business do? Cloud Lending Solutions. How did you guys grow so quickly? What did it do, and how did you grow so quickly?
So so it was a fintech business, and so it started in 2013, and during that time, if you recall, a lot of businesses, a lot of banks, they weren't lending to small businesses and consumers. They were very, very gun shy. This is after the 2008, and their credit policies are very, very strict. So a lot of fintech lenders started to come on or surface. OnDex, Cabbage, now probably household names. At that time, we were very young businesses, Lending Club, Prosper. And they weren't going to go and buy the bank technology, because banks typically use the Fiserv, the FIS, really monolithic legacy platforms, and they would cost them like millions of dollars to implement. So we wanted to ride that wave a little bit. So we built a lighter version of that on the cloud. That's why the name Cloud Lending. And it enabled lenders to manage their loan portfolio, right from originating any type of loan, and that could be small business loan, consumer loan, commercial loan, even leases for that matter, to underwrite them on our platform, and even back office servicing, and if they become delinquent, the collections and all of that. So just one system as opposed to 5-6 point solutions. And we built it specifically by keeping fintechs in mind, because they were they wanted APIs. No bank has gone to, let's say, Fiserv and FIS and asked for APIs, but fintech wanted APIs. So we built it API first, and we built it configurable and things like that. So it was very new age spin of a very legacy product. Now, it's kind of boring to build loan origination and servicing system. But when you think about it, a financial institutions make money just by lending. That's how they make money. So this becomes very, very critical for our customers. So it was like it was their customer record system. So many times we were the first vendor who would get paid, because if we stopped working, their business would sort of shut off, right? So we were and I won't say that we orchestrated that we wanted to be the most mission critical system for our customers, but it happened that way. We just got lucky. But we realized very quickly that, this is a mission critical system for our customers. So then we started to have, or at least we had the pricing power, right? Because we knew that how much more money customers were making. I'll give you an example. There's a company called OpFi that went public last year. They were one of the early adopters in 2013-14, and they grew their business. They're a $1 billion market cap company, and they probably did a few $1 billion on our platform. But we were their backbone all these 7 years, right? So that's a kind of an example. So we were mission critical, and we could really have the pricing power. And our contracts were 5 years long, 3 years long, 5 years long. And we learned a lot from that business, but it was like a enterprise SaaS business. We eventually grew it to 40 million annual recurring revenue before I hung up my boots. So that was the business.
And if I were to kind of distill that down, would this be an appropriate summary to say that you recognize the business model of the traditional banks, and you recognize the shift from traditional to FinTech, to new competing lending services, and you said, hey, instead of all these providers, all these FinTech companies rebuilding the same stuff, let's just build it once and then allow the newer FinTech companies to use this platform, this lending platform, to build products on top of. So it's like like you said, recreating the backbone business model of what banks use in new API centric FinTech focused way. Yeah,
that's precisely it. So we focused on things that FinTechs will not see value in building. Right? They would want to be the owners of the customer experience. They would want to be owners of the underwriting model.
Yeah.
And we were like, hey, just focus on that, because that's directly tied to your enterprise value. Why do you want to figure out how to compute loan interest? That's boring.
Right.
Let us do that. It's hard, but it's boring. Let us do it.
Right. It's a good strategy. It's a fantastic strategy, which has been used many times to think about business model opportunities where you see you see a trend. You see, okay, we're going from banks to FinTech, maybe physical located banks in the middle of cities to online, and that's happening in a big way. And what are the services that are being offered by these new companies that are duplicate? It's not the uniqueness of what they're offering, but it's like a foundational layer. So that would be accounting would be one of them. They're going to do accounting in a different way, but you guys are, I think, unique in that you were central to the business model. So if I'm picturing another trend in the world, say healthcare going remote, right? We have telehealth businesses. There's a lot of telehealth businesses. And I saw you're very interested and involved in healthcare. When you have a lot of telehealth businesses, well, the actual telehealth portion of the technology, the video software, the documentation, that may not be what a company is selling. They might be selling some specific type of doctors or uniqueness, but they just want to bolt on this capability. And so if you're providing this is probably about 6 years ago, I'd say that was the perfect time to start this kind of business. But today you could name off multiple different trends and then identify that same way of thinking about it.
Yeah. And I think we have taken that learning of being in a wide space, which everybody would need, all the innovators would need, let's just say that. And we're trying to apply the same theory in CION Digital as well. So when you think about the world of crypto, it's growing so rapidly, and there are lots of infrastructure companies also out there, like a bunch of custodians, and a lot of compliance services, tax services, blockchain analysis services. And I think when you think about a non-crypto savvy business, if they have to embed any of this into their existing business workflows, they would be lost. So what we are doing right now is we're basically building an orchestration layer that connects with all the leading custodians and leading tax providers, leading compliance providers. And then we will just orchestrate a solution, and that could get embedded into existing business workflow. As an example, a traditional lender, let's say a lender who wants to now accept Bitcoin as collateral. As a concept, that sounds great because it reduces their risk. They may even use that custodied Bitcoin to generate more yield. But when you think about actually executing it, you start asking questions around, how do we get started? Do we need licenses? How will the Bitcoin move from borrower's wallet into our custody? What happens if market goes down? How do we issue a margin call? What happens if they don't pay? How do we liquidate it? Do we have a liquidity provider? So execution of that really involves a bunch of point solutions. And that's where we would come in. And we would basically provide an orchestration platform that will basically solve this problem for them so that they don't have to worry about, all that goes behind the scene, but they will only worry about selling this new product to their customers.
When you say orchestration platform, I'm picturing an orchestra where you have multiple different software companies that you're integrating with. Is that right? Or are you sort of building technology from the ground up and then selling it into companies to manage crypto transactions?
Yeah, absolutely. We are just integrating with a whole bunch of crypto infrastructure companies or crypto solution companies because combination of those point solutions and we candidly, we don't know how that orchestration platform we use. It will totally be dependent on the innovator's mindset. And they could come up with ideas that we haven't thought about, but they could use our orchestration platform to execute on it.
I see. And just to wrap my mind around this, like how many different software vendors would you be integrating with on the back end?
So we have identified about 8 core buckets, like custody is one, tax is another one, compliance is another one, risk management another one. Similarly, we have about 8 or 9 big buckets. And in each bucket, we have identified, we're calling it primary and secondary. So primary, we have identified around 2 to 3 each. And then secondary, we will see how successful they become. And if they become successful, we will start integrating with them. The primary ones are already successful businesses. As an example, Elliptic is a company that does on-chain analysis of blockchain data. It's been used by hundreds of companies already, but most of their users are crypto native businesses, not an established business. So we said that, hey, for on-chain analysis, we have to integrate with Elliptic. And when we are selling our orchestration platform, our customers don't have to really think about Elliptic because it just comes with the platform.
So is it right to say that you're using Elliptic in this case as like a back-end engine connected via API? So would the customer even know that they're using Elliptic, or?
Yeah, if they ask the question, they would. If they don't, they wouldn't. They wouldn't even
know. Oh, wow.
Yeah.
That's interesting. It's kind of like a hyper API centric, where you're this middle layer that's using the power of all these protocols and companies out there, with the front end customer not even necessarily knowing the difference.
Yeah. Yeah. Middleware, I think, is the right terminology to use. Yeah. We are a bit of a middleware that's integrating with all the essential crypto services.
And it relies on APIs from the crypto services, right? The capability you would have as a middle layer is somewhat limited because you could build on top of it, but it's limited to the API capabilities that these companies offer, right? Because you're effectively taking the functionality that they built on the software level, and then you're just accessing that functionality through the APIs.
Yeah. And you just hit the nail on its head when you said, if there is something that they don't offer, we'll have to build it. So we are already seeing some of those elements. Like, as an example, many of our customers are looking for policy management. As an example, they're like, hey, if somebody sends, there's a limit of 5 Bitcoin per transaction, right? That's a policy. Now, how do you configure that? So you will configure that in the orchestration platform.
I see.
So now nobody is providing that, so we'll have to build that or policy management on top of it.
You got it. It's interesting because it's very similar in a way to what you've done before. Obviously, that's no coincidence, but that must have been part of the mindset that you went into this with, which was like, okay, let's identify a trend. Let's identify a core part of what the trend relies on for functionality, and then let's integrate to the providers out there to make it happen. So today the company is 2 years old, I think I have, and about 15 people. So relatively new, or is that? No. Okay.
Actually,
Sorry.
It's just, no, it's just 4 months old. We started in October of 2021. So it's 4 months old. We have about 20 employees.
How do you have 20 employees after 4 months? How is that possible? It's so many people.
Well, most people I have worked with in the past. So it's essentially, we are doing it again. So a bunch of execs from Cloud Lending, a few people from QTWO, a few people from FIS. They all just came together and we ramped it up very, very quickly.
That's awesome. And is the company self-funded? Have you invested or funded so far?
Yeah, I'm personally invested. It's actually, we raised seed capital. We raised $12 million of seed round last month. So it's obviously, for a seed round, it's quite a big round. So, but we did raise $12 million, and we onboarded very, very good VCs with a lot of great connection in blockchain and fintech in general. So Greycroft, Greenvisor Capital, 645. Quota Capital, Ulu Ventures, they are all investors in the business.
Congrats on that. That's, 4 months in, 20 people, 12 million raised. That's solid progress. Are there other players in the space that either are direct or indirect and well established, or is the space really in its complete infancy?
Yeah, I think it's very early, but the custodians out there, meaning other infrastructure companies who got in early, now they are trying to figure out, we've been serving crypto native businesses. How do we go serve other non-crypto native businesses, let's say banks, or so they are obviously going after the same market that is our core customer. Our core customers are not crypto native businesses. Actually, our core customers are people who don't understand crypto, right? So that's the overlap. So in other words, we partner with a bunch of custodians, but now they are expanding their capabilities so that they are able to work with established businesses. I think the uniqueness would be, we are designing our platform from ground up from day one specifically for that use case, as opposed to growing into it. In other words, we are designing so that to make it integration ready, even with their legacy infrastructure, which may not have been thought through with the, let's say, the existing players out there. So anyway, I think our biggest challenge right now is being very focused. Every time you speak with the organization, they have a crypto angle in mind, and going through that process, figuring out certain patterns, and then focusing on one or two use cases is something that we are going through right now. So we've identified lending as a very interesting vertical. We have identified cross-border payments as another interesting vertical, because now people are just working from wherever, right? And getting them paid through normal Swift channels and all of that is very expensive and slow. And we think that blockchain can solve some of these problems.
Totally agree. Yeah, it seems like I think you said it well, but you have a lot of expertise selling into traditional fintech companies, and then you have a lot of different potential services you can offer them. So distilling that down to figure out what do these guys really want is slightly different than your last business. Whereas, business is like, okay, lending, bam, let's just nail that. Here, it's like, as you said, 8 different verticals or 8 different categories that these customers could be into. So yeah, parsing that out is, sounds challenging, but it also sounds fun. And it sounds like the right problem to solve.
Yeah, totally. I'm excited about, hopefully, the team that we have is really about, growing and having the biggest impact. So we'll see how this plays out, but we are very humble, and we'll listen to the market and then go accordingly.
Yeah, I love the business because it's the necessary underlying infrastructure that allows us as a society, really a global society, to shift from the old way to the new way, from the traditional banking system to the decentralized crypto blockchain system. And it's one day when you sell this for hundreds of millions and no one's ever heard of it on the consumer side, and they're like, how did all these traditional fintech companies integrate with crypto? It's like, Scion, crushing it in the back end. What's the origin of the name Scion, CION?
Well, I actually just took coin, COIN, and I spelled INO.
Tricky.
And then I think I was on a call last week, and my head of sales, his name is Jim Donatel, and he thought that actually I was being very thoughtful about the name. So he may have Googled it or whatever, and he was telling somebody else, and I think on the call somebody else asked the question about, hey, what does Scion mean? And Jim says, oh, that's new beginnings.
Ooh.
And I go, huh? But it's funny because I didn't think about that, and he did some research. Later on, I told him that, man, I wasn't being so thoughtful. I just flipped O and I in coin. So
I like that. Anyway, I like that little synchronicity. And then, are you active on social? Do you tweet or write publicly? Or don't?
No, and I think I'm going to get on that. Let's just say that I've been hibernating a little bit last couple years, and I'm not active on social, but that's one of the things that I'm trying to accomplish this year.
Awesome. Last question I'd love to hear. Are there people or articles or books or places or anything that comes to mind when you think of where you learned or where you continue to grow intellectually?
A couple of things. One is I'm a big fan of this business called Tata's, TATA. they build a massive business in a place like India, where fraud is so common. Like you just cannot get around it. And they build an incredible brand. And that brand is all about, just doing the right thing and being fair to the consumers. And they've been incredible. So I watch their move. And so that's a brand I follow and I'm inspired by. And then there's this individual, Dr. Ambedkar, and not many people have heard of him, but he was who's the person who wrote the Constitution of India. And he was the first person who said, who tried to bring, equality. India's Constitution is amazing. It talks about not discriminating at all, being fair to everybody. It is just the most progressive literature there is. And he was very outspoken about all the shit that goes on in a country like India. He wasn't being, loved for it. He was very, very hated for it. But he just was, the impact that he has had on the number of people, it's unmatched. I don't think there's any other figure out there who has had a similar impact. If you start reading about him, you will know. He was basically a representative of about 750 or maybe 850 million people in India when he was writing this constitution, because he had that lens that, okay, we have to take care of these people. So I think a big credit goes to him as how India has come about in its democratic, journey. Democracy journey.
Yeah, that's amazing. Isn't it amazing that the impacts from people who write these foundational documents, constitutions, they are the most important thing in a society. They're the holy grail. They're what binds people together on something that they can at least agree on in principle. I saw that, as a side note, Tata, the company, very big company, founded in 1868. Can you believe that? They're 130, 40, 50. They're old. Been around for a long time. Yeah. That's awesome. Well, maybe digital coin or Scion Digital will be around for 150 more. Mr. Fulzele, thank you for jumping on today. I really enjoyed getting to know you, and we wish you the best.
Thank you so much, Mike. Have a wonderful day.